Hello there, guys. What's up, everybody? Hopefully, everybody is doing amazing. Everybody is doing great. It's another day, another opportunity. We are here doing whatever we love doing and getting to get better every day, all day. So it was on a Thursday. I guess currently we are on Friday as I'm doing this video. So we had a good Thursday. We had lots of lessons that I did learn, and I want to share them on this video. And so, without wasting much more time, I'd like to start. But before, remember to like this video, comment. If you have any question, you can ask, and also subscribe onto this channel. So let's get cracking. So first of all, I would like to go from the higher time frames, and if you've been following um, my previous videos, I've been bearish on Euro USD, right from this level here from the daily fair value gap. I wanted to see a drop lower. So if I can read this note, or you can pause the video and read this note that I had for today, but I will also try to explain it here. So we've been bearish. We saw on Wednesday CPI we had a dip into the OTE level. You can go to the previous video before this, rewatch it because I explained everything. We had a retracement onto this OTE level. Also, we had this proper reaction of this daily inversion fair value gap, which was a key level. Then with this rejection lower, with this upper wick, it shows that from the lower time frames we have fair value gaps or bearish fair value gaps that are being created with these wick here. So after seeing that, and after this candle, which was on Wednesday candle, closed below the lower quadrant of this daily fair value gap, then I was expecting today to drop lower, and for sure my first target was this Tuesday's high, from which probably we could have seen a tap into it, then maybe a rejection. So for me, this was the first low hanging fruit that I had to take my partials probably before I expect a rejection higher, but that didn't happen. We had there is order block even violated, which is one thing I wanted to see. And probably this next other candle, which is the Friday candle, also I'm expecting to see this swing low, which was a Tuesday's low, no longer a previous day's low, but this swing low to be engaged tomorrow. So yeah, I'll be talking about this candle, and for that reason I'll drop onto the 4-hour time frame. And what did I see? So upon during after the London session, that's when I came in to prepare for the New York session. As you know, I'm a New York trader. I trade only the New York kill zone, and I came in after the London session. And what did I notice? If you can observe these candlesticks around the zone, we had a formation of this fair value gap from this candle's low to this candle's high, which is this for fair value gap that I'd labeled there. Then after the fair value gap had been created, I saw this other next candle being a bearish engulfing candle. And what do I mean by it being a bearish engulfing candle? You can see it closed a bearish after it had cleared this previous candle's high, and also can see it closed below the opening price and the closing price of the previous candle. So that's what an engulfing candle consists, whereby we want to see either the high or the low of a candle being taken or being grabbed, and then see the candle, the engulfing candle itself, close below the open and the closing price of the previous candle. For that's for instance if we're talking about a bearish engulfing candle. But if we have a bullish engulfing candle, we want to see the low being taken and also the candle close bullish above the opening and the closing price of these previous candle. So for this instance, we had this bearish engulfing candle. We had the high taken, and you can see it closed below the opening, which is this level, and also the closing price, the opening and the closing price of this uh, previous candle. So after seeing these, usually gives me a confidence that adds to me confidences that I'm expecting lower prices. So what happened from the next candle? We had that a sharp retracement higher, tapped into that 4-hour fair value gap. Then we can see this sharp rejection lower. So with this rejection lower, if we can go onto the lower time frame, and then we'll notice we have lots of fair value gaps that were formed there, bearish fair value gaps. So with this price action that I'd noticed inside the 4-hour time frame, then I was like expecting to see a drop lower, and sorry, whatever I was expecting or my target for the day was this Tuesday's high, because this is the daily order block that I was talking about, right? Because we can just have a dip into these 4-hour fair value, 4-hour, not the 4-hour, into these Tuesday high, a dip into it, then we see a rejection probably higher, then probably from next week we can anticipate a drop lower, but that didn't happen, and we had this drop lower which went further lower beyond our targets. So after noticing that, we had a PPI news that was at around 8:30. So this is the candle that I was watching, and what happened during this time is the PPI news rallied higher back into this 4-hour fair value gap. You can see these candles high. We had a dip into this 4-hour fair value gap, and then it rallied lower, closing below these 4-hour order block. So you can see, so we have the 4-hour fair value gap as well as the 4-hour order block, which is this up close candle, being respected. So to me, these are added after seeing this candle close below this candle, then it added confidence to me that I'm expecting the next candle to rally lower. So what happened during the CPI? This is the situation that we had before the New York session. We had this little bit of consolidation, but I was watching these highs. If we drop to the 15 minutes time frame, you will see whereby we have these relative equal highs as well as these 1-hour fair value gap, which before this price action at around this level, I wanted to see what will happen during the PPI. I had anticipated to see a rally higher to clear these relatively equal highs. The buy side liquidity is above these highs, probably a tap into these 1-hour fair value gap, then a drop lower, but that didn't happen. So what happened is we had these sharp rally higher, then with a rejection respecting these 1-hour order blocks as well as these 4-hour key levels. Also this fair value gap, I was keen watching it, and I wanted to see this candle close as it did. So I wanted to see it close below the consequent encroachment of this 1-hour fair value gap, which did happen. And after that had happened, I just was looking for my entry. So with this price action here, I dropped onto the 15 minutes time frame, and inside the 15 minutes time frame, I did turn on my indicator, and with that indicator, I noticed that during the London session we had cleared both Asia highs. So we had these Asia highs being taken by a wick, and I saw these bodies, the bodies of these 15 minutes candle were respecting this for our fair value gap. We didn't have any candles body closing inside the 4-hour time frame, but we had only wick that cleared these Asia highs and also tapped into that 4-hour fair value gap. Then we had this drop lower. So after this, if someone was probably in a rush, did enter a trade here and probably aiming for these lows that I was targeting. So since now I'm done with the indicator, let me get rid of it. So if someone was early to enter a trade, which is what I usually call as the first fake move. Probably this was the first fake move, because if somebody entered inside this level with the highs or the stop loss above these swing high, the market here could have rallied to his direction, and before hitting the TP during the news, we had this rally higher, probably taking out anybody who had entered early. Then you can see later on we had these are now the anticipated move. So I was keen on this first fake move, because for the past on Tuesday, I guess it was a lesson that I learned from the video I did on Tuesday. You can go rewatch the video, and I was keen this time concerning this first fake move, not being experiencing FOMO. So I was patient enough to wait for the actual move. So what happened during the PPI? We had this retracement higher into this for fair value gap. Then we had this a little bit of consolidation before this drop, and then as this candle formed this fair value gap, I did enter based on this 1 hour immediate rebalance. So as this candle had closed, then this candle's manipulation face higher. That's where I did have my entry, and with my stops, we had this inversion fair value gap. I was kind of conservative. I didn't want to go that aggressive, because yesterday I was taken out because of my aggressive stop loss. So I was kind of conservative above that high, with these uh being my overlapping line of defense. So I wanted to put it there, because the market could have rallied, tapped into this fair value gap, and if it could have rallied above this inversion fair value gap, then I would be wrong. But after the immediate rebalance had been formed, I did enter my trade with my stops above there, targeting a 1 to 2, which was slightly below my target. Then we had that sharp rally lower to my TP, and this fair value gap here was a breakaway gap, and I didn't want to see that fair value gap being tapped, and as you can see, we didn't really tap into it. So about these highs over here, you can see I'm having my GU SMT. So I went onto the GU because they are correlated pairs, and I wanted to see what is happening there, and why didn't I see that I tap into that 1 hour fair value gap that I've been talking about, and also why didn't we see a clear sweep of these relative equal highs, or the buy side liquidities above these highs, because we're having lots of liquidities above here, but why didn't we see those liquidities being grabbed? So if we go to the GBP USD, what we can notice is we have this swing high, which is a 5 a.m. candle. So the 5 a.m. high had already been taken by these 830 high. So we have this higher high for the GU, but if we go to the USD, Euro USD, we have the 5 a.m. candle. So where's the 5? Over here we have this 5 a.m., which was also taken by this 830. So there, but we had now these are the same as to GU, but this high for the Euro USD, which was the 345 a.m. If we can go on to the GPP, we can notice that the 345 a.m. candle for the GU had also been taken out by this 5. So we had that formation of a higher high for the GPP, but the Euro USD formed a lower low. So we didn't see this high being taken. The 345 high wasn't taken for the Euro USD, but for the GBP USD, the high had been taken. So this formed as an SMT, so a smart money technique. So with these, that's where I decided to enter my trade, expecting not to see these highs being engaged, and we had that drop lower, and our TP was hit with a proper, I guess, trade management. After taking partials and trading my stop losses, then my final TP was hit, and was a good day and a good trade. So something I noticed is something about these breakaway gap, whereby sometimes we can anticipate a tap into this fair value gap, but because the 1 hour or the higher time frame had already formed an immediate rebalance, which usually after immediate rebalances form, we tend to see a tanking of prices, either higher or lower. We should be careful with these breakaway gaps. Sometimes we might be missing trades, and sometimes we can rush in and probably get burnt. So it's something to be very careful of, not to be missing trades or not to be taken out. So I guess that was the only observation I did have for the day, and also some news are not worthy trading because, yeah, we can get burnt, and it's better to be patient, waiting for that clear setup to form, and we jump in. So that is it for this video. Remember to like, and if you have any question you can ask, then probably I gonna be answering that video, that comment or question. So I guess tomorrow is another day. I'll be seeing you probably tomorrow. So for this video, I'll see you later. Bye bye.